Hello everyone. Today in this lecture we will discuss about the types of chart in stock market. We know that technical analysis is all about timing. A stock can be performing very well, but if you make a trade at the wrong price, you can incur heavy losses.
That is why traders use various tools to make the right decisions in the stock market. And one of the biggest tools they use is the stock chart. Now let's move on to what is a stock chart. A chart is a graphical representation of price and volume movements of a stock over a certain period of time. In the graphical chart, with the x-axis which represents the time period and the y-axis which represents the price movement. Now see that the time period can vary from intraday to even a few months or more. Now let's talk about the types of chart. Technical analysts use a variety of charts based on the information they seek. However, there are three types of charts that are most commonly used. They are line charts, bar charts and candlestick charts. Now let's discuss one by one. A line chart is probably the most common type of chart. This chart tracks the closing price of the stock over a specific period. In the chart, the x-axis represents the time period, while the y-axis represents the stock price. Now, each closing price point is represented by a dot, and all the dots are connected by the lines to get the graphical representation. While it is considered to be quite simplistic compared to other charts, a line chart helps traders to spot the trends in the price movement. Since it tracks the closing price, it does not offer much information regarding the intraday price movement. Next, we have bar chart. A bar chart is quite similar to a line chart. However, it offers much more information. Instead of a dot, each plot points in the graph is represented by a vertical line. This line has two horizontal lines extending from both the sides. It is represented as follows. Now see here, the top part of the vertical line represents the highest price at which the stock had traded during the day. Similarly, the lower parts represents the lowest trade price. The left extension represents the price at which the stock opened, while the right extension represents the closing price of the day. In addition to offering greater details than a line chart, the bar chart also gives insight on volatility. If the line is longer, it means that there was a greater volatility in the trading of the stock. Now let's discuss about the candlestick chart. Candlestick charts are very popular among technical analysts. They offer a great deal of information in a very precise manner. As the name suggests, the price movement for each day are represented in the shape of a candlestick. It is similar to a bar chart because it represents the four data points: high, low, open and close. While the bar chart gives volatility information only on a single trading day. Candlestick chart can offer this information for a much longer time period. In addition, the candlestick come in different colors based on the price movement. A falling candlestick is generally represented by a black or a red body, while a rising candlestick is represented by a white or a green body. In the above picture, it is clear that the values are represented in the form of a candlestick. Now let's discuss about some other chart patterns like Ranko chart. Ranko chart is one of the major types of charts in the technical analysis. It is basically focuses only on the price changes and use the price bricks to represent a fixed price move. They filter out the price movements which make it easier to spot the trends in price. Also, these features makes the chart appearance more uniform. A Ranko chart technical analysis is pretty effective in identifying support and resistance level. You get a trading signal when there is a change in the direction of trend and the brick's alternative color. Now let's talk about Heikinesi chart. Heikinesi is another type of popular technical chart that originated in Japan, and it is quite similar to candlestick chart. With this chart, you can visualize the uptrend or downtrend quite clearly. When there are continuous green Heikinese candles without lower shadows, it is a reflection of a strong trend. On the other hand, when there are continuous red candles without upper shadows, it reflects a solid downtrend. As the Heikinese bars are the average, there's no exact open or close for a particular period.